So let's look at Eneza Limited. Let's look at Eneza Limited. Eneza Limited, the one written Eneza Limited. Happy time, we shall do it later. So allow me to read this question. We are told that the following are the summarized financial statement of Eneza Limited as at 31st October 2020 and 31st October 2021. You are given Eneza Limited statement of profit or loss for the year ended at 1st October 2021, given the sales all the way to where we have the profit for the year. Sales all the way to where we have the profit for the year. Then we have statement of financial position as at 31st October 2021 and 2020. 2021 and 2020. Examiner will always start with the what? The current year or the previous year will be the second one, will be the next. So we have a non-current asset, current asset, equity and liabilities, where we have non-current and current. The additional information class, we have 4 of them. Additional information class, we have 4 of them. We're told that the process of the sale of non-current investment amounted to 600,000. So that means they sold a non-current asset which was related to investment worth 600,000. So in the first case, I have one item under investing activity. I have proceeds from sale of investment, and that will be an inflow. Proceed from sale of investment, and that will be an inflow. Then we are told of equipment with an original cost of 1,700,000 and a net book value of 900,000 was sold for 640,000 during the year. So class, from there, I can see there was a loss on disposal. Loss on disposal. Remember, if we have the net book value of 900,000, then we are selling at 640. We have a loss. We have sold at a loss. We have sold at a loss. And you know where we record the loss. We know where we record the loss under non-cash item. Non-cash item. Then we are being given information about the property, plant, and equipment as at 31st October 2021 and that 1st October 2020. We shall see how that information will help us to know whether there was acquisition or disposal of what? Of those PPE. Then dividends totaling to 1,600,000 were paid during the year. This was very good. They gave you even the dividend. In the case where class you've not given the dividend, you can use the retained earning to get what? Dividend. We say that retained earning are paid from profit. Right? Therefore, if you are not given the dividend class, you are able to get them from the retained earning. In this case, they computed the dividend for you. They computed the dividend for you. They want us to come up with a statement of cash flow in accordance with the requirement of IAS 7, statement of cash flow for the year ended 31st October 2021. 31st October 2021. Class, that is a question that we are going to look at today. That's a question that we are going to look at today. So the first thing is to start with the heading, Eneza Limited. Eneza Limited. Statement of cash flow statement. Let me just put it cash flow statement. Cash flow statement. Cash flow statement for the year ended. For the year ended. This is 31st of what? This is the year ended 31st of October. Yes, 31st of October. 1st of October ni mwezi wa 10, 2021. 1st of October 2021. Class, how many columns should the cash flow statement have? How many columns? 2 columns. You see that they should have two columns. So our shillings are in 1,000. Yeah, our shillings are in 1,000. So you can just put our shillings 1,000. We truncate the zeros, 3 zeros. Truncate 3 zeros. Good, good. And then we start off. And starting with the cash flow from operating activity. Cash flow from operating activity. Cash flow from operating what? Activities. Cash flow from operating activity. So under cash flow from operating activity, class, there was an item that every student is supposed to get. There is an item that every student is supposed to get. What do we start with when you talk about it? It's a indirect method. Indirect method. This indirect method that we are using in preparation of this. So what is the first item that we need to identify from our question? The first item, it is profit before what? Profit before tax. Profit before tax. Profit before tax. Profit before tax. What is our profit before tax? Of which we need to record it under the first column. What is our profit before tax, class? It is 6,000. It is 6,000. Profit before tax. We check in our income statement. In our income statement. In fact, it's 6,000 exactly. It is 6,000. Profit before tax is 6,000, and then we adjust for what? Adjust for non-cash item. Non-cash what? Items. So class, if I look at this question very well, I can see I don't have things to do with the impairment, amortization, but I have a depreciation. I'll have depreciation. I saw there was loss on disposal. I saw something when I was looking at it. Always remember our dial G, dial GF. Yeah, so I have finance cost. Finance cost. Dial GF. This will guide you. Finance cost, I know I have. Or what else? Depreciation, impairment, amortization, loss on disposal, gain on disposal. I don't know whether there was a gain on disposal. I can just put it in case I get it. I'll just gain on disposal. I tell you whether there was a gain on disposal. We shall see whether there was gain on disposal in this case. So, from that point, I can get an item direct. Because I was told that there was a disposal of equipment. There was also disposal of these PPE, and it had a net book value of 900,000. This PPE had a net book value of 900,000, and it was disposed. It was disposed at how much? It was disposed as 640. What is our loss on disposal, class? Loss on disposal. Wangapi? Loss on disposal. There was a loss on disposal here. That is 260,000. So we eliminate 3 zeros, meaning we eliminate 3 zeros. So loss on disposal, it is 260. Are we going to add it or to less? Loss on disposal, is it added back or subtracted? Loss on disposal. Do we add it back or do we subtract? Some people are saying we subtract. Some people are saying we add. Remember, in this case, you just remember what that item, how that item is treated in the income statement, or how it was treated in the income statement. This one, if it is a loss, it reduces our profit. And since we want to get our profit back to normality, we add it back. An non-cash item. Then we check, did we have finance cost? So above the PBT, profit before tax, let's look at our items that reduced or increased our profit, and they are part of what? They are part of our non-cash item. Like for example, I can see there was interest received and then interest paid. So I also need to have, so for this is the interest paid, the same as interest paid. How is it treated in the income statement? And then we had interest received. Interest received. How is this treated in the income statement? It was subtracted. So that means the interest paid reduced our profit. To take our profit back to normality, we have to add. We have to do what? We have, this was subtracted, so we have to add back. We have to add back the interest paid. Interest paid. Interest paid. Interest paid. How much? What is the value of the interest paid? It is 1,500. So 1,500, we have to do what? Add back 1,500. That one we have to add back. And then for the interest received, remember that we received. We received. So how did it affect our profit? It increased. It increased our profit. Therefore, for the interest received class, we are going to less. Interest received, we are going to less. Please confirm whether we are together up to that point. Please confirm whether we are together up to that point. Just confirm. All right, all right. Now, let's look at this item that was sold, the item that was disposed, the item that was disposed. Can you tell me what was the cost of that item? The item that was disposed. The item that was disposed. There was an item that was disposed. Investment. Investment. It was disposed at 600. And what was its balance brought down in the statement of financial position? What was its balance? Tunataka tuone kama kulikuwa na gain. It was 500. Thank you so much, Miri. At least you're able to see that investment value in the trial balance, the value was 500 and it was disposed at 600. Did they dispose this at a gain or at a loss? Did they dispose it? Okay, did this disposal give them a gain or a loss? There was a gain on disposal of 100 shillings. Gain on disposal of 100 shillings. Are we going to add or less? Are we going to add or less? Gain on disposal. Gain on disposal. Are we going to add or less? We less, because this gain increased our profit. Therefore, we're going to less this gain. We're going to less this gain. We're going to less this gain. We're going to less the gain, and that is very good. That is very good. That is very good. Now, from that point, class, I know for me to get depreciation, I need to have some workings. For me to have depreciation, I need to have some working. Before then, I can move forward and go to the non-cash corner there. Changes in what? In working capital. Changes in working capital. In working what? Working capital. Allow me to use WC. Changes in working capital. And then for the working capital class, I told you that we have 3 items. In most cases, we have 3 items. Which are they? Inventory, receivable, if you can remember. For me, I call them LIP. And then we have payables. Now, I want a good student to remind me what happened to my asset. For me to know whether it was an inflow or outflow, please help me know what happened to the asset, or which formula should I use for the asset. There is just a simple format I told you that you should be using for you to know whether it was an inflow or outflow. Instead of thinking of at the beginning nilikuwa na hii, at the end nilikuwa na hii, ili increase ama ili decrease. Leave alone that. Leave alone that. So we say that you take the opening minus what? Closing. And when it comes to the payable, you take the closing minus opening. Please, that is very important for us. Now, can you go to where we have inventory? Direct go to where we have inventory. Kindly go to where we have inventory. Are you there? Can you tell me what was the opening? What was the opening value of our inventory? What is the opening value of our inventory? Ngapi? The opening value of our inventory. Somebody is giving us the opening value. It is 2040 opening minus the closing value at the end, 2021. Make sure that you are reading 2020 and then 2021. Haya, 2021. Ama umesoma tofauti. It is 3,000. Given 3,000. Now, can you tell me what we shall get when you less that? Kilonzo millicent. Tunapata difference ya ngapi? Na tulisema kwamba if you use this format, kindly note that you're going to put that the way it is. So if it's a negative kilonzo, you put it as a negative. You can see here we shall be having a negative. It's negative 960. It should be negative. Please don't forget negative 960. I hope you guys are getting that. Negative 960. Then we go to the same to the next one, which is receivable. This one is not running properly. Down kidogo. 960. Let's go to the next one. Receivable. Patia ya receivable. Angalia what we have for receivable. Account receivable. At the start of the year. At the start kuna ngapi? Somebody? I want us to do it literally 6,300. Minus at the end. Tuko na 1,000, eh? Is it? Nimesoma hiyo ya chini. It is 7,800. So still inaona kama still ni an outflow. Outflow ya ngapi? Ni outflow ya ngapi? 1,500? People are getting 1,500? 1,500. Asante, 1,500, which is a negative. But those are 3 marks, by the way. Whatever that we are indicating there, those are 3 marks. Then we go to the payable. Payable is now opposite. Tulisema kwamba payable ikienda hii direction, receivable, ama liability ikienda hii direction, receivable inaenda hii direction. So payable is closing minus opening. So can we go for the payable down there and current liabilities, and then we see whether this one was an increase or a decrease. Twende kwa payable pale. Payable. What is the closing for payable? 2021. Value ni ngapi? The year 2021. It is 2,540 minus 2,380. 2,380. 2,380. Hata ngapi? Difference ni ngapi? 100, 120. Hapa ni 40. Hapa ukweli 160, 160, which is hapo positive 160. Class, once you're done with that, now we shall have cash flow after changes in working capital. Cash flow after changes in working capital. So you can add them, but remember there's an item that we don't have here. So we just proceed to the next part. We less tax paid. I want you to be keen here, and then the interest, what? Interest paid. So class, for the two, I hope they are visible. I need to adjust a bit. For the two class, you rush to what? For the two class, you rush to the current liability section, because if tax was not fully paid, it is recorded under what? Under current liability. So can you rush to the current liability and tell me whether we have tax component? Do we have tax element under current liability? Just slash and tell me, just type word if we have. You can identify tax element under current liability. Also, check whether we have interest element under current liability. Kunazo, do you have them? Uko tu kwa current liability. Naona account payable bank under taxation. Taxico. Kindly. Here we have free marks. So we don't have interest under current liability. Therefore, that means the interest that was paid, the actual interest that was paid is 1,500. And this is an outflow. The actual interest paid was 1,500, and that was an outflow. Now for the tax class, this is the way I want you to be computing tax in any way. So tax. So come and open a T account here. Tax account. This is debit, this is credit. And we know that dial, not dial G, but dealer. Wait, it says visible. Yes, dealer. Dealer. Class, this is important. Dealer. So we know that tax fall under liability. So it has a credit what? It has a credit balance. So the balance brought down, class, is what we usually see, that these are having the balances brought down on the credit side, balance brought down. So now, can you tell me the balance brought down for tax? Just go where you told me that you found this. You found the taxation in under current liability. In the year 2020, what was the tax? That is the balance brought down. In the year 2020, your balance brought down. The previous year, 2,200 asante, 2,200 asante. Then balance carried down the year 2021, current year. But here you are carried down asante, asante. Give me that of 2021 for taxation, 2,400. You know what? You're almost done. You're almost getting this, because the next step you need to look at the income statement and check, did they pay tax? Pale kwa income statement. So since we are dealing with the tax, you just say the income statement element will be credited. So income statement walilipa ngapi? Walilipa ngapi? Sema walilipa kitu ili wapate profits. 2,800. How I wish that everyone is getting this. Everyone is getting this and able to see what we are doing. Now you balance the account, and the balancing figure will be the actual tax paid. Bring it here, actual tax paid. So with the total hapa, naona hii ndio itakuwa mob, because here already isha. So ni kama walilipa tax. Doing that here. 5,000. In 5,000. Have been given 5,000, so we have 5,000. So bank, how much tax paid? Bank. So bank account. Ipangapi? 2,600. Asante. 2,600. Now, class, this is what we come and record where? Or there. So 2,600 is what we record, and this is paid. Tax paid. Tax paid. Kwa pamoja. Are we together? So when it comes to interest, you do the same. You open the account, you check balance brought down, balance carried out. Then what do we have in the income statement? Like for example, if we were to do that for our case, we have the balance brought down as 0. We have balance carried down as 0. Then we have income statement as 1,500. So 1,500 balancing the account. Bank will be 1,500. That's why we did not adjust this. Sijui kama tunaelewana. Tunaelewana? Are we together? We together? All right, good. So that is how you draw those accounts. Let's move to the next part, and the next part class will be, or should I move to getting the position so that we finish up this part? let's see. Let's compute our depreciation so that we finish up this part. Once we are through with this part, it will be okay. So, depreciation, I expect to get my depreciation from the PPE section. And I've been given both the cost and the what? Both the cost and the net book value. Both the cost and the net book value of this. And then I've been given accumulated depreciation as well. Accumulated depreciation as well. And there was a disposal here. There was a disposal. So I can come up with a PP account. And this is debit. This is credit. Then on the other side, I can have my accumulated depreciation account. Na class nimewambia kwamba this dealer is very important for me. Good. Now, these are two accounts. These are two accounts that we have to prepare in order to know what is our actual depreciation. So if I look at the accumulated depreciation, it's represented by A here, the dealer A. So that means accumulated depreciation, it has a credit balance. So can you look at additional information and give me the balance brought down for my accumulated what? Depreciation brought down. Ningapi. Accumulated depreciation has a credit balance. That's why I usually add A hapa. Hiyo ni accumulated depreciation. Ni 5,800. And the balance carried down, hiyo ni rahisi. Just look at the other side of 2021. Carried down ngapi? It is 6,800. 6,800. Thank you so much. We shall be balancing that. But we need to look at whether there was a disposal, but we need to check. Good. Now, when it comes to our PPE fall under asset. All asset class, they have a debit what? A debit balance. Therefore, the balance brought down will be on the debit side. Balance brought down. So what is the balance brought down of our PPE? Just check. Remember, we are looking at the additional information number. 3. What is the balance at cost? Of course, let's use cost side. I'll show you when to use the net book value. It is 11,900. Yes, 11,900. 11,900. And then we have the balance carried down. Ningapi? 14 what? Is it 14,400? 14,400, right? 14,400. But now we were told over a disposal. Plant worth how much was disposed? Angalia hiyo additional still. Plant worth how much was disposed? Watu waoni hapa. Plant worth how much? Anatuambia kwamba not plant, equipment. Equipment with an original cost of 1,700,000 and a net book value of 900,000 was sold for 640 during the year ended. So equipment, remember PPE, equipment is still there, PPE. Property, plant, and equipment. So equipment is part of this. So the equipment was 1,700 was sold. So there was this disposal. There was this disposal. 1,700 Disposal. 1700, sorry. 1700, that was disposal. And did we have anything else? Do you have anything else relating to the property, plant, and equipment? Yes, revaluation. Can you look at the equity section? The equity section, we have revaluation reserve on property, plant, and equipment. Hii revaluation mwanzo ilikuwa 1820, alafu tukakuwa na revaluation ya 2000. So there was a revaluation gain of how much? The difference. Revaluation gain increase the value of our PPE. Revaluation gain ngapi? Valuation gain ni ngapi? Valuation gain ni ngapi? Kiangalia vizuri. Valuation gain ni 108, the difference. And then you check whether there was acquisition of PPE. Wali acquire ama wali use more. So balance the account. Please balance the account. This plus this, napata ngapi? Alafu sasa tunaangalia the balancing figure. So what will be the total on the credit side? I can see credit side is having much. Credit side iko na mingi. $16,100. So 16,100. And then you balance the account. So 16,100 minus the 2 in order to know the acquisition value. Wali acquire PPE ya ngapi? Wali acquire PPE ya ngapi? 4,200. Oh, 4020. Now class, when you shall be looking at the cash flow from investment activity, this one acquisition will be an outflow. Kwa sababu pesa ilifungua. Now, what is the net book value of this equipment? Equipment net book value. Tunataka tuone reduction of value of this equipment. Its net book value was 900 and its cost ilikuwa ngapi? Ilikuwa 1700. Na tunajua kwamba kupata accumulated depreciation it cost minus kupata yes, if I want to get net book value, it is cost minus accumulated depreciation, we get net book value. True or false? Please confirm for me. This one you did on the foundation level. This one, cost minus accumulated depreciation, we get net book value. True or false? True or false, class? Yes. Now, if that is the case, I just replace my cost per 1700 minus X is equal to 900. Is it possible to get our accumulated depreciation? Yes, 1700 minus what? 900. Now, this accumulated depreciation will be on this side, and it imetoka wapi? Kwa PPE. Imetoka kwa equipment, that is 800. Now, please balance my account so that we get depreciation. Hii side iko na mingi. Kwa ngapi hapa? Itakuwa 7600, right? This is 7600, if I'm not wrong. 7600. Balance my account. Hapana. Is it 76? Really? Okay, it's 76. Sasa nione kama ama nimegonga fire. Itakuwa ngapi toto? Please. Hii toto ya hii. Ama ni 80. Ni kama 80 juu kuna kale 1. Kama ni 80. Ndio. Class, can you give me the total of this? No. Is it 80 or 70? Ndio. Hii inaweza kuwa aiweki vizuri. Sawa. Nipatie total ya hii. We want to balance 8 plus 6800. It is 76. So it was okay. 7600. So toa hiyo tupate our depreciation. Of course, it will be there. The balancing figure hapa. Depreciation ni ngapi? 1800. Now we needed this depreciation, and we know we add back. Class, at this point, we are able to get the whole of this section. There's no any other item that is remaining for us to get the whole of this item. So class, can you add for me all this, so that we get the cash flow after changes in working capital hapa. Achie tu hiyo. Zuri tu hapa, vizuri. Yenye ni kutoa toa like that. Ili tuende kwa the next part. The next section of the question. Nipate tu hadi hapa. How much? Somebody is working on it. Want us to move to the next one? Wow, our people. Unachukua 6K, 1800 plus 260 plus 1500 plus 160, alafu unatoa hizi vitu zingine zote. Kuna mtu anapata 2560, 2560, 2560. Hiyo ni gani? Ni hadi hapa ama ni yote? Kama unanipatia yote mimi ni nani? Naandika yote tu yenye unanipa. 2560 ni yote. So the cash flow from operating activity, net cash flow from operating activity, as we are having 2560. Net cash flow from operating activity, as we are having. So we shall have this. It's visible, net cash flow from operating what? Activities. Net cash flow from operating activities. So I'll adjust my camera a bit that you're able to see. And net cash flow from operating activity, we are having 2650. So shillings. This. So we shall put it on the record column. Is 2650. Asante. Then we go to cash flow from investing what? Investing activities. There's something okay. Let me see your chart here. I've seen several charts here. It's 2560. Yes, 2560. It's 2560. Sawa. Activities. Now class, hapa ni direct. Acquisition of PPA of 4020. Proceed from sale of asset. Ilikuwa ngapi? Then we had interest received. This is very good. We received interest of how much? Interest received 500. Proceed from sale of asset ilikuwa ngapi class? I can see another chart here. 2560, asante. Interest from sale of asset ilikuwa ngapi? Iliuzwa ngapi? Ile equipment yenye ilikuwa disposed 640, right? Disposal. We disposed yes, 640. Okay, we need to be very specific. Which assets? Equipment. Then there was also another disposal. There was also another sale we sold. Sales proceed. Tuliuza another item. This was 640. What else do we have? Kuna kitu ingine kweli? Remember this class, we said that from investing activity, we look at the non-current asset. So let's go and look at whether we have the non-current asset pale. Any other non-current asset yenye hatujaguza. Tuko na PPE kwa balance sheet, tuko na intangible asset, na tuko na gani ingine? A minute. There is a student anasema hajaongezwa kwa group hapa. Tuko na intangible assets. Now, can you tell me whether there was a acquisition ya intangible assets? Kwa sababu uangalie mwanzo ilikuwa na ngapi na mwisho iko na ngapi. Before I solve something hapa kidogo. Too bad if hajaongezwa kwa group. Nasema kwa RMS. RMS, I'll give you the number later. I'll give you the number later. Now, for the intangible asset, at the start of the year, value ilikuwa ngapi? At the end of the year, value iko ngapi? Kulikuwa na increase ama decrease, ili tujue kama kulikuwa na acquisition. Sawa. That's what we are saying. Intangible assets. Intangible asset yetu, naona iko na 4,000. And then, at the end, tuko na so ni kama wali acquire, sio? So pesa ikafanya nini? Pesa ikafanya nini? Ka reduce, intangible asset due to acquisition. Wali acquire 1,000. That one will reduce our what? That one will reduce. Don't forget that this one is also an outflow. Now, can you give me the total net cash flow from investing activity? Net cash flow from investing activity. First, give me that. Net cash flow from investing activities. Itakuwa ngapi? Just compute that. And then we move to the financing activity. Cash flow from financing activity. Cash flow from financing activities. Cash flow from financing activity. So, ingapi pale? 3280, which is a negative. 3280. Now, financing activity class, I told you that when you're looking at the financing activity, you look at non-current liability and the equity item. Let's start with the share capital. What is share capital? If you look at what is share capital, what happened? At the start, ilikuwa ngapi? At the end, ilikuwa ngapi? You state whether there was an increase. So nikiangalia order share capital yangu, at the start was 3,000, at the end was 4,000. So there was increase or issue. Issue of order share. So you dictate or you write down the difference. If there was an issue, that was cash inflow. Pesa iliingia. Then you go to the share premium. Ama hatuna share premium iko. Share premium, what happened to the share premium? Mwanzo ilikuwa ngapi? Share premium yetu kwanza, mwanzo ilikuwa ngapi? Mwanzo it was 3,000. At the end ni ngapi? Share premium yetu at the end 3,200. So there was increase in share premium. Increase in share premium. Still, that one is an inflow of 200. The difference, The difference. Then we move to the next item class. Next item. Do we have any other? Tuko na short-term investment? No, that one no. Retained earning. As I told you, retained earning will always help you to get the dividend paid, the actual dividend paid. And if we look at this question, examiner gave us the dividend paid. What is the value of the dividend paid? What is the value of the dividend paid? What is the value of the dividend paid? Ni ngapi? Dividend yenye nilipwa 1,600. Let's prove whether this retained earning can give us the dividend paid. So this is what we do. Retained earning account. So this is debit, this is credit. Debit, credit. All right. Now, can you tell me the balance? Oh, okay. It has a debit or a credit balance. Does it have a debit or a credit balance? Does it have a debit or a credit balance? Retained earning inafaa kuwa na debit or credit balance. Remember dealer. Earning, it's an earning. It's a profit. It's a revenue. Does it have a credit or a debit balance? Always, when you're opening your account, kindly be remembering the dealer A. It has a credit balance. So the balance brought down ni ngapi, and the balance carried down. You hata unaandika tu hivyo, unaziweka. So brought down ya 2020, carried down ya 2021. Can you give me this? 2020, unaenda tu pale kwa balance sheet unaangalia 2020 ilikuwa na ngapi? Somebody? Just doing this for the sake of any other question that you might be required to do. That is 600. And then carry down. Carry down. Still in the year 2021 now, David. 5,200. What other item that will affect our retained earning? Somebody? What other item that will affect our retained earning? Somebody. Item gani ingine ita affect our retained earning? The profit for the year. Na ilikuwa ngapi? So from the income statement, ni ngapi? Nipatie from the income statement, angalia ilikuwa ngapi? 3,200. Now we balance the account, and whatever that you get is the dividend paid, na hiyo tunaita bank account. So what is the total hapa? Inakuwa 6,800. So what is the balancing figure? What is the dividend paid? Na ndio balancing figure hapo 1,600. So you see that if you're not given this class, the dividend paid, please you are able to do that earning to get. So dividend paid was 1,600. 1,600. And that one, if it was paid, it is an outflow. Any other item? You go to non-current liability. Tuko na loan hapa. At the start of the year, loan ilikuwa ngapi? Sasa tuone what happened. Kama walilipa hii loan ama waliborrow. At the start of the year, loan ilikuwa ngapi? Just check. 1,000. At the end of the year, loan imekuwa ngapi? 3,400. Tumeomba ama tulilipa? Tumeomba 2,400. So we have a cash inflow of what? Of 2,400. A cash inflow of 2,400. So we acquired loan or borrowed loan of 2,400. So our cash ika increase na 2,400. Now class, can you give me the net cash flow from financing activity. Financing activities. So give me the net cash flow from financing activity so that we finish up this. I want us to finish up this so that we can do something else. 2,000. Somebody giving us 2,000. Then from this point, it's where we say that we have the net changes in cash and cash equivalent. Net changes in cash and cash equivalent. Net changes in cash and cash equivalent. So class, can you give me the net changes in cash and cash equivalent? Of course, you add these, and this, the three, the net. So what is our net changes in cash and cash equivalent class? Net changes in cash and cash equivalent class ni ngapi? Acha niweke hapo juu kidogo. Net changes kwa Excel ungefanya nini? Ungecut net changes in cash and cash equivalent. How much are you getting? Total ya hizo tatu. Somebody 2560 minus 3280 plus 2000. 1280. We're getting 1280. We're getting 1280. 1280. Plus, what did we say? Next step. Upper next step itakuwa gani? You add cash and cash equivalent. Cash and cash equivalent balance brought down. How do we get this cash and cash equivalent balance brought down class? How do we get that? Cash and cash equivalent balance brought down. Cash and cash equivalent balance brought down. You look at any short-term investment or current assets that was not included hapa. Unaona hapa kwa wapi? Hapa. Unaona hapa kwa hizi changes in working capital. You add them. Short-term investments or current assets that was not included, that is not here kwa hizi tatu or kwa hizi mbili. You add them, then you subtract the bank overdraft, if any. The bank overdraft, if any. So who can give me the total of the short-term investments? Itakuwa given by cash and any other short-term investment. Can you give me the total? Give me the total. Naangalia tu kwa current asset pale. Okay, kuna mtu anapatia 1040. So niko na, you look at brought down is for year 2020. Tunaangalia 2020 kwanza. So niko pale, naangalia naona kwamba niko na current asset. I have short-term investment ya 0. Short 2020 brought down hapa ya 2020 niko na short-term investment ya 0 na niko na cash in hand ya 20. So whatever that I have under the balance brought down section is 0 plus 20 for the current assets. 0 plus 20. And then I check in the same year, do I have bank overdraft? I subtract. Plus, can you tell me now what is my bank overdraft in year 2020? Itakuwa 0 plus 20 minus bank overdraft. Bank overdraft ni ngapi? Just check under the current liability. Ngapi? 1020. People are giving 1960. Sorry, 1960. Now can you give me the results? 20 minus here. Utapata nini? Give me the results. 20 minus that. Itakuwa ngapi? 1940. Negative 1940. So in minus 1940. Now you know what class? The results that you get once you take 1280 minus 1940, it is what we call cash and cash equivalent balance carried down. Hiyo ndio cash hii kampuni itakuwa nayo at the end of the year. At the end of the year. It might be having some cash, or it might be having no cash, or a negative cash, which means that cash yao ilikuwa depleted. So how much are we having? 1280 minus 1940. 1280 minus 1940. What are you getting? Ah, 1280 minus 1940 will be a negative 660. Negative 660. Negative 660. You know what, class? You know what? This negative 660, it should tally, or it should reconcile with the balance in the year 2021. And how do we confirm that? You just confirm that using the same formula. You take the short-term investment plus cash minus bank overdraft. Ufanye hivyo alafu niambie kama utapata the same. You take the short-term investment in the 2021 plus cash minus bank overdraft and tell me whether utapata hiyo. Kindly do the same in the year 2021 and then let me know. Wow. 1040 minus 1700 and it is giving the same. Lakini kwa mtihani usisumbuke sana, but imagine these two, unaona hii na hii unaweza ipata hata kabla hujafanya huku kwingine, kwa sababu they are just there, zimepeanwa pale. These two marks are free. These two, we have very free marks class hapa. Unaona kama hii, these are direct free mark. Direct hizi nazo, hizi tulisema hizi ni direct, tunaziangalia tu hizi. Hizi za changes in working capital, hizi they are free. Kucompute tax nini hamwezi shindwa. Mahali sana inaweza leta shida ni hapa, and if you do practice inakuwa rahisi. Hii interest ilikuwa too direct. Hii ilikuwa too direct. Tangible asset tutashindwa kweli. Sasa free marks. Shares unaangalia kama ili increase ama ili decrease. Dividend paid nimeonyesha njia nzuri ya kutafuta. Then these are also the free marks. So kupita hii kitu ni rahisi. Only that you need to know format na venye zinafuatana. Cash flow is a savior. This is a savior. It's a savior. Cash flow is a savior. So class, tuko pamoja? Are we together? As far as that is concerned? Are we together? Tuko pamoja? Are we together? Is there any question? Any question? Any question? Any question, class? Any question? Okay. If there is no question, that means we can be able to proceed. To the next question. Happy time. Tunaweza changanua hii happy. Tunaweza changanua hii happy. Hii question ya happy. Let's look at this question ya happy. Tuone vile tunaweza fanya happy. Happy times. Let's look at happy times. Are you there, class? Are you there? Kopale. Confirm kama tumefika pale kwa happy time. Hiyo swali. Confirm. I need to give you a break. You know, you need to. How did you get the tax paid and interest paid? Higher. Now, I'll give you a break of 5 minutes and somebody to at least guide Lillian on how we got that. At least guide Lillian on how we got that. And I'll just stop my recording and then I just pause. It's okay. This is supposed to record. So for the sake of Lillian and 99 others, sake of Lillian 99 others, we're looking at how we got, or how we get in general, how do we get there? How do we get there? The tax paid. How do we get the tax paid? Simple. You just have to come up with a T account, in the T account of the tax account. This credit side, the debit side. And we know that tax is a liability. And all liabilities have a what? A credit balance. So the balance that is brought down. Lillian, can you tell me how much do we have on the taxation and our current liability on the taxation in the year 2020? What do we have for tax? In the year 2020, what do we have for tax? Lillian, tuko na ngapi? Just soma. Year 2021, taxation pale chini under current liability. Nisomee hiyo value. Lillian, you know, we need to finish up this. Ni ngapi? Lillian ametoka. 2,400. We have 2,400. And then that is the balance brought down. In the year 2021 is what we call balance carried down. The current year, balance carried down. Ni ngapi? Nisomee hiyo pia. Ni ngapi? Still pale penye umesoma, penye pameandikwa taxation. In the year 2021, ni ngapi? Year 2021. Please. Do it very fast, Lillian. Hope you're able to see. Change. Ala. Amepeana gani kwani? Lillian, year 2020. Always note, examiner will not put for you 2020 following 2021. Hapana. Be checking hapo juu. Ni the other way, eh? Ni the other way, Lillian. The other way. Atakuanzishia na the current year. Alafu na kuwekea hiyo previous year. Like this. The format will always be like this. Most students, by the way, huwa wana confuse. Wanachapa nini? Sawa. So Lillian, kindly. Can you check year 2020? Sawa. So hii ni 2,400 na hii ni 2,200. Lillian still tuko kwako. Asante. Be checking up there. How the years are arranged. Go to the income statement and check where they paid tax paid, less tax. Tunakuwa na tax paid, less tax ili tupate profit. Check hiyo tax ilikuwa ngapi yenye wana claim ndio walilipa, and that is not the actual. Ilikuwa 1,500. Lillian ako wapi? Where is Lillian? Jackie, asante. Mark. Lillian, where are you? Still looking at Lillian. Lillian, have you seen it? In the income statement, mali wanatuambia ili tupate profit, si huwa tuna less tax. So hiyo tax ndio wanasema walilipa. That one is not the actual tax paid. And that's why we are coming up with this to get the actual tax paid. Tuweze kuiweka wapi? Hapa. Lillian ako wapi? Lillian, we're waiting for you so that we'll be at the same page. Okay, 2,800. Now, you balance this account to know whether they paid tax, the actual tax paid, to get the actual tax paid. So if I look at this, people give me 5,000. Lillian, is that true? This still 5,000. Now the balancing figure itakuwa bank. So in your bank account, the actual tax paid ni difference. This minus this. Napata, ndio tulipata nini? 26 what? 2,600 ndio tukaleta hapa. Tuko pamoja Lydia? Asante. Now when we go to the interest, paid, Lydia, still the same account apply, only that we change this because interest still we fall under that section, still interest yet it fall under that. But we shall treat the interest the way we treat what? These are tax. So for the interest paid, Lydia, do we have the balance for the year 2020? Balance brought down in the year 2020 for interest? Just yes or no? Do we have? Unaangalia pale kwa current na bit hatuna, so it's zero. Either the balance brought down, carried down hatuna, but in the income statement they claim they paid interest ya ngapi? Interest paid ama finance cost. Interest paid kwa income statement is 1500, and then you balance the account of 1500, and that's why we remain with the 1500. This is the 1500 that we put here. I hope now that is clear. As far as the tax and the interest is concerned. So you need actual tax paid. Your 1500 interest paid. 1500 was the actual interest paid. Actual interest paid. Good. I want us to look at this happy time, but this question, generally, I want you to do in your groups. Usually, natamfanya in your groups. You discuss, you scratch your hands as you tackle the question. What about loss on disposal? Admin anauliza loss on disposal. Tulipata ngapi? Ilikuwa ngapi? What did we get? Loss on disposal. Tulipata ngapi? Admin. Tulipata ngapi so that I can relate. Tulipata ngapi? So that I can relate. Kama mtaki tuanze swali lingine, but no worries. 260. All right. Can we go where we have it's a good question. Enter additional information number 2. And confirm. Please be confirming kama uko pale. We are told that equipment with an original cost of 1700,000 and a net book value of 900,000 was sold for 640. So if the net book value of that equipment is 900 and we have sold it at 640, what will be there? Is there a gain or a loss? There is a loss. A loss of how much? The difference, 900 minus 640. That is how we arrived at 260. I hope you are together now. Asante. Okay, class, let's look at this Happy Time company, Happy Time Limited. We are told we are given the income statement for the year ended, that is June 2017. We have the statement of financial position as at that date, and then we have the non-current assets. We have here 2017, 2016. You see, they start with the current year, 2017, 2016. So be very keen. And the previous year is giving you the opening balances. Previous year is giving you the opening balances, and the current year, the closing balances. So be very keen always. Then we are told that we have the property, plant, and equipment. Property, plant, and equipment. We're given at cost, depreciation, the same case they did in our previous question. We have that information. Additional information number 2 is plant disposed of during the year ended, that is June 2019, had original cost of 18,200 and accumulated depreciation of 6,300. The disposal proceed amounted to 51,10,000. The dividend were declared before the year end. Now, in this case, class, you see, examiner did not give you dividend. But we have the share capital. So through that, you'll be able to compute what? a dividend. Through that, you'll be able to compute a dividend. Through that, you'll be able to compute dividend. Now, from this question, we are required to come up with a statement of cash flow in accordance with the International Accounting Standard 7. That is the statement of cash flow for the year ended. That is June 2017. That is June 2017. That is June 2017. That's the question, class. That's the question. That's the question. That's the question. The question. Class, is it possible for you guys to do this question in the group discussion? Is it possible for you to do it in the group discussion and then we shall do it together? Is it possible? Is it possible for you to do it in a group discussion and then we shall do it together? You just attempt the question. Make sure you write down the entries that you are able, and then try to discuss even the adjustment on whether there was acquisition of the PPE or there was not. Try to compute the dividend paid. Try to compute tax paid, if any. In fact, in this case, I can see still we have proposed dividend. Okay. Tax payable. Still, we have to compute the tax. Kwanza dividend tumepewa. For the dividend, you have been given the proposal. So we shall use that account. You can use that account. You see, we have proposed dividend under the current liability. So still, the dividend you use that those values. The balance brought down, balance carried down, and then you do what? You add the one that is in our income statement. So that means in this case, you've been given proposed dividend because they say that the dividend were declared before the year end. So there is the proposed dividend that you will use. So you are not going to use the share capital or the retained earning. Do we have even the retained earning here? They did not give you the retained earning because they want you to use the proposed dividend. So to get that proposed dividend, or the dividend, the actual dividend paid, just need to look at the balance that was brought down, which is in this case is 4,200, and then carried down is 4,900, and we had 7,700 in the income statement. The one that they are saying they paid is 7,700, but the actual one you will get it using that method, or by opening a T account, you'll be able to get the one that they actually paid, the one that is they actually paid. So this is what we shall be doing. You do such a question, and then your class, your group leader to share. You share your work together with mentioning it is group number what. So you do the work as a group, and then the group leader to share your work, indicating in group number ngapi. And I would suggest you be sharing that work in our group, in our official WhatsApp group, Through that, it will be easier for us to follow what is happening. So far ni groups gap is meet. So far ni groups gap is active. Which group is active? Na wewe uko kwa group ni kwa active kweli?